Hey, what's up? Mic check, mic check. How's everyone doing? What's up, everyone? Sunny is so sovereign. Just looking for a video to watch while I'm doing this video, trying to stay updated. You know what I mean? On the markets right now, if you can see, Matic, well, a lot of people know as Polygon, is going crazy right now. And if you didn't know, that's what we hold in here now. SoL SoVereign treasury. So looking like a good day. We got our exit strategy where we're gonna go ahead and take profits. And yeah. So real quick, let me go ahead and look for a video that's talking about what's going on today, what's been going on the last couple of days. So 1 second, you guys. something. I'll go ahead and put my video on. I don't look the best, but it's alright. So again, welcome everyone. It's Sunny and SoL SoVereign. We here another day. Like I said yesterday, the goal is this community. Well, the goal at the moment is to build this community. And the goal of the community is to have capital to go ahead and deploy back to our physical community for a rate of return, like a return, and just for the overall good of our community. Um, that's what that's our aim. So we're gonna go ahead, stay educated um, on the markets, on these new protocols. Um, like that, we know what to invest in as a community when the time comes. Um, so yeah, here we got Matic open. Matic's been going crazy these last few hours, last couple of days actually. Last 3 days I had a strong 3 days, and I would really like it to hit $1.20. That is the target price for the SoL SoVereign community, and that's where we're gonna go ahead and take profits. Again, we don't got much money in our treasury right now, but right now it's only me. You know what I mean? But again, we creating these 100 unique NFTs, and those 100 unique NFTs is they're all the profits we make off these NFTs is gonna go to the treasury. And again, we're gonna follow the game plan that we have now. The game plan ain't written down, but like a lot of people know, we are in a bear market, so great time to accumulate, a great time to just accumulate. But it depends on the person. Everyone's a different trader. Everyone's a different type of investor. So you know what I mean? I'm not a financial advisor. That's not what I'm here to do. I'm here to learn myself, try to educate others. But when it comes to, buy, sell, I could tell you what I'm doing. I could tell you what we're doing. I can't tell you that's the best thing for you to do, all the time. But again, Matic, crazy run. Matic, I ain't gonna lie, I always made good money when I was like when I consider myself more of a day trader. I always made good money on Matic. I think the most I ever made on Matic probably almost $1,000, and it feels good when it's like an honest $1,000 off your skill, off your research. You know what I mean? So, and look where we at now, 2022. Matic being the number one scaling solution for Ethereum, and just the number one scaling solution in the world in a lot of people's eyes. I really don't know a lot about all the other scaling solutions, but we are gonna dive into them like those. I think the the most buzzing one that I heard right now is what the ZK rollups. I don't know how, but they're helping these blockchains with their transaction loads and lowering the gas fees and whatnot. But don't quote me because I might be wrong. But yeah, here we see Matic still going crazy. Actually, I'm over here looking at the weekly. I told you guys the daily. I'm so sorry. But yeah, still the last 3 days, last 5 days, the last week, Matic been going strong. And so what I would like to see here. So now we're really looking at the daily here, right? Besides price action, because I use more of these moving averages. If you want to learn more, go check out, I think his name BK Crypto. He explains these moving averages better. But what I would like to see is what would I like to see? So what I would like to see is that red line cross that yellow line, just the same way that green line is crossing that yellow line. So we see the 7-day moving average crossing the 77-day moving average. For me, meaning I could be bullish on the short term. The weekly, if I was a day trader, I'd be really looking into this, next week or two very hard, trying to find my 1-2% gain, three, whatever, maybe even more. I haven't put that percentage ruler on it. Um, for me to become bullish on a more longer term, let's say like on a monthly, I would like to see that red line past the 77-day moving average. Um, so yeah, that's what we would like to see. And if we see that, I feel like we're gonna hit $1.20 here soon, no matter what. Right, the next week, within the next week. If we don't, that's fine. I'm still holding. But if we do, that's when we're gonna go ahead and take profits, leave our initial investment in there, and go ahead and with our profits stay on a stable coin and put it back in on when we got a better price and whatnot. So yeah, or maybe put in a whole new investment. Maybe put in the Bitcoin. Who knows? We'll see. But right now, Bitcoin ain't looking so hot. But right now, Bitcoin was to. We'll talk about Bitcoin when we got the Bitcoin chart up. So let's go ahead and put the price pips back on it. Let's zoom in a little bit, see what we're working with. Yeah, momentum's looking crazy. A lot of buying pressure. A lot of people buying. Last time we was around this area was around May 10th. We couldn't pass that like 95-cent mark at all. We definitely couldn't pass the dollar mark. If we could pass the dollar mark, our goal of 120 will be there. And I'll go ahead and put myself a little reminder to set an alert on CoinStat. So when that price target does hit, we're gonna go ahead and take our profits. So yeah, that's Matic. That is Matic. Let's look at Bitcoin quick. Ooh, Bitcoin looking bully. Bitcoin looking bully. Look at it in daily. See that triple bottom. I never was a fan of that triple bottom. I don't really know how I worked that triple bottom, but I've been seeing tweets talking about like, hey, check out that triple bottom. What does that triple bottom? If you're into technical analysis, what's that triple bottom mean to you? Is it bullish? Makes you bullish or makes you bearish? Ian Dunlap said the bottom of Bitcoin was around 9,800, 9,800. Yeah, shout out to Ian Dunlap. Shout out to 19 Keys again for putting me on. Um, been watching Ian Dunlap and his peoples. 5 hourly. Um, if Bitcoin was to hit a price of 23K and look bullish, look like it has some momentum, I could see this thing hitting, going back to around, 27, 28K. Um, but again, you know, I said that, 12 around 12K could be the bottom. Been listening to Ian Dunlap. He was saying that around 9,800 could be the complete bottom. Again, and I'm gonna, he's been trading and been in the markets way longer, so. But taking that into consideration, there's not much of a difference between, 9,800 and 12K. There is, and then there isn't. Um, right now at 22K is still a great time to accumulate. Um, this is an advice to the traders, whoever trading, day trading, swing trading, whatever. Again, there's not much of a difference between 12K and 9,800. May look at here when we start doing some technical analysis and start marking it up with some lines, but just remember that. But back to Bitcoin, I would be a bullish guy if Bitcoin can make, if I could see 23K and some buying pressure. Um, but like I said yesterday, I'll say it again. The more we see these institutions come in, more regulations we see, more big money come in, the more we're gonna see these markets moving like S&P. So just be patient, be safe. And yeah, that's my opinion on Bitcoin. Really would love to see Bitcoin at all-time highs again. And in a way, I would love to see Bitcoin at 9,800 again. Either way, we ready over here. Yeah, we already talked about Matic. Matic still blowing the top off. What else can we dive into, man? What else can we dive into? Out of here. Yeah, this dude shout out to 19 Keys and Ian Dunlap. What's the first video I watched of them? I haven't got it up here. Cause I'm really just trying to watch and then post as I go. But yeah, this guy I think he said he was in the market since 2008. Been trading since 2012 and made billions of dollars. No one really talks about him, but that's that's how I want to be. I want to be, making billions and no one really know who I am either. Like I don't need the fame. I don't need the fame. But so yeah, just been watching a lot of his content and yeah, so dive into here before we go ahead and start making the fourth NFT for the SoL SoVereign community. Go ahead and check. Yesterday we checked a little bit on CoinStack, but let's go ahead and check again. Y'all not got my Telegram open? And yeah, man, been thinking about, trying to get back on my interview and stuff. Um, just been really thinking hard about it. I won't say much on it yet. Still waiting on some words from a few people. I'm excited though. yesterday we checked out this article from PointStack, their newsletter. Let's go ahead and check out an older newsletter. users, hold on. All users at KOU will participate in Watch to Earn by default, collecting rewards for their usual daily activities on the platform, views, like, comments, and reposts. And of course, the creators uploading KOUs will be compensated for all these interactions with their content. This is what I was talking about with many people, even my beautiful lady here. Social media in the future, and just any content creating platform in the future, the power is going back to the content creator, because everyone know what is a platform without their content creator. What is YouTube without, you know, the people that's making these videos and choosing to post it on YouTube? You know, what's TikTok, what's Facebook, what's Instagram without their content creators? I was just listening to Ian Dunlap. He was talking about how Twitter is one. You see the NFT people, marketing their NFTs, but besides that, people don't create content to go and post it on Twitter. That being said, so now we're here reading about a company called Code, where it's gonna be a wash to earn type of social media where you collect rewards for, you know, your views, your likes, your comments, and your reposts. That's the activity as a consumer. Someone that would just lay in bed and watch. Let's say Kobe is TikTok, right? I get rewards for these views, or viewing people's stuff, liking people's stuff, commenting on people's stuff, reposting on people's stuff. And of course, as they say here, the creator that uploads this will be compensated for all those interactions with their content. They should be get, whether it's a penny. Right now, let's talk about penny. Let's say they got a penny for every view. Let's say they get 10 cents for every like, $1 for every comment, and $2 for every repost. This is social media in the future. This is what's gonna create also basic competition for people to create better stuff. Now I'm pretty sure there's gonna be. I use a penny for very obvious reasons. It could be fractions of a penny. Let's say you got no followers and it takes you, it takes you 10 likes to get a penny. It takes you 10 comments to get, $1. That's pretty hard on even on, let's say TikTok, to get 20 comments under your content. So, that being said, it's a cool project. I'm gonna go ahead and add it on the Discord. We can follow it.
SoL SoVereign NFT number 3. The way this person unlocks knowledge.
We have Craig Raw with us, creator of, I would argue, one of the most interesting desktop wallets, wallet coordinator software out there. Does an amazing job of showing you enough information that you can figure out exactly what's going on with your Bitcoin transactions, but it also gives you enough breadcrumbs that it inspires you to go a little bit deeper and to understand the transactions in more detail. Craig, thank you so much for joining us. Excited to dive in.
Hi guys, great to be here.
Thank you so much. What would you add to that introduction? How did you get into the Bitcoin space? What inspired you to create Sparrow Wallet? And what led you to where you are today?
I would say what inspired me to get into it was really just, starting off just wondering how this thing could exist and how it could survive, and really trying to answer the question of, what's going to kill it. Tried for many years to figure that out. In the end, I couldn't find a way. So that just led to greater passion and interest. And that kind of led me eventually, so much time spent on it, spent thinking about it, that I just wanted to spend my time building something in the space. That's what I do. I create products. So I just wanted to create a product in the Bitcoin space, and a wallet seemed like the natural place to go. Mainly because at the time I was really battling to create a good multi-sig setup. I was trying to use the Electrum wallet to do that. And I ended up just sort of having to hack a whole lot of stuff together, writing custom scripts. And I just didn't like the way that it felt. It didn't feel very secure to me. So it's kind of where it began, was just, a few little things on the edge, and then, one thing leads to another. I started building a wallet right at the start of COVID, had lots of time. It just kind of grew from there.
What led to some of the design decisions that you made specifically with Sparrow Wallet? Was that just an organic process in terms of what you wanted to see, or were you really consciously thinking about what might, entice people to learn more about their Bitcoin transactions?
So the way first of all, I want to say that I, primarily build Sparrow for myself, and I think about my own needs. I think that's the best way to build a product. That's not to say that every single thing I build is something that I, use a lot myself, but it's certainly a good place to start from. When I, think about interacting with, the Bitcoin that I have, make transactions and so forth, I want to know what's going on. I have the sort of, you can call it the sort of hodler's fear, if you will, that when you have to make that large transaction, maybe you are moving from a less secure to a more secure setup, that you need to make a transaction to move your wealth. And that's a scary moment for anyone. And really, trying to, how do you reduce that fear? How do you make yourself stress less in that, in that experience? How do you know you're getting it right? The only way to know is to A, know what you're doing, and B, have the information so that you can correlate that to what you know. Sparrow is really an attempt to give you that information and to provide some tools which can help you learn, can kind of reveal things over time. So you're not bombarded with every piece of information from the start, but you can choose to dive in further and further. And that, I think, is a good way to learn, a good way to figure things out. But ultimately, it's really about trying to make it so that you can transact in a way that is not only feels like you know what you're doing, but also allows you to have the tools to be able to do it in a private and secure way as well.
I love it. What were the? I just love, like, I'm looking at the way that you lay out the UTXOs that are being combined, and then showing the change outputs, where it's going, and then, in fact, I'm just going to share my screen. This is a wallet that I created for the purposes of this conversation, and so I've gone in, I sent myself 2 transactions, just like a couple bucks or whatever, and I'm now at the send screen, or the send tab, and walk me through sort of like what we're seeing here and how someone should make a decision about this specific transaction.
Yeah, I mean, I think what you're kind of looking at here is, you clearly have, we go to the transaction diagram first, which I think is sort of a good way to be able to see what the transaction looks like, right? First of all, we have to understand the concept of that every Bitcoin transaction is a collection of outputs, one or more, and then that a collection of inputs, one or more, and then that through this transaction becomes several outputs plus the fee that must be paid. So that's really what we're looking at there. We're looking at the inputs there on the left and the outputs on the right, and they're kind of the transaction diagram is just a way of being able to show you what's going on. So what we have here is 2 inputs, and it's going into a send output, which would be the address that you entered at the top, the amount that you've entered below it, and then additionally there's an output below it. That's the output in the middle, and that's your change output. So you are sending change back to yourself. And this is a fundamental part of how Bitcoin works, right? It's not an account in the classical sense. It is a system where we destroy every UTXO and create new ones with every transaction that we have. And if we don't have an exact amount to send, then we must send change back to ourselves. So that's kind of, one of these fundamental things, which is pretty basic for anyone who's been into this, and probably everyone who's listening to this chat, but it's not clear to everyone. And that's kind of wanting to sort of highlight these basics, I guess, is where it all begins. You can then take that information into more complex transactions like coin joins and sort of understand them and understand what's going on and how they can make you more secure. At the bottom of those outputs, it's actually not an output, it is the fee, but it's shown kind of as money going out. And that fee is then the amount that you pay to the miners for that transaction. So we can see in the sort of middle of that area, we can see and a place to adjust the fee rate, which is currently set to, I think, pretty low, but you can move that up. And if you move that up, you obviously get your transaction possibly processed faster. So that is an absolute, kind of value in sats, which you are then paying. And you can then see that you're hovering over now. That's the sort of fee graph. And if you go to the little toggle above it, you'll be able to see what the mempool currently looks like. So we can see that, that mempool, I'm sure we're all familiar with it now, but it's not sort of empty. We can see that there are some transactions in it, and that can give us an idea of how much it is that we are needing to spend on our fee. So that's kind of that view is really just trying to give you all the tools that you need as you construct whatever transaction it is that you want to send.
Yeah, and again, I mean, I can't say it enough times. I think this is such a novel thing because I'm not aware of any other wallet or desktop wallet that gives you this much information in such a compact space. I'm used to going and having to, pull up mempool.space, look at the mempool, come up to my own conclusion about what fee I want to set. And just for the audience, with a Bitcoin transaction, you basically get to decide how strongly you want to incentivize miners to put your transaction into the next block. So you get to choose, if it's a transaction that, is not super urgent, you can set it extremely low and then be confident that it will eventually get confirmed within a day or two. Apologies for the dog barking. If it's more urgent, you set a higher fee, and then basically miners are more likely to pull it into that block. And so this chart and the system you have here just makes it super clear and easy to understand, like how that's going to work and what competitive environment you're interacting with within the mempool at any given time. So tell me more about the privacy analysis part of this.
Sure. So, it's actually pretty similar to what you get if you've ever been to the sort of Block Explorer. They kind of give you a little bit of information there at the bottom of every transaction. This is kind of similar to that, right? It's a pretty basic analysis. I'm not going to claim that it's doing any kind of deep transaction graph analysis here, but it's just trying to give you some tips. So, for example, if you send to a different address type, now we can see from the address that we're sending to here that we're sending to a SegWit address, if your wallet is of a different address type.
Welcome back, and thank you for sticking through that commercial break. I want to remind everyone, if you have not already locked in your tickets to Bitcoin Amsterdam, to do so now. Ticket prices will be going up.
Process are in a tough situation. We're going to just commit to 40 cents a terahash. I'm making a ton of money.
Coin to people in a medium and a way that they understand. That's how you got on my radar. I'm super excited to have you in this conversation today and to dig into the mining space and how you think about communicating about Bitcoin to the masses. Welcome.
So I'm going to just come out and ask a very hot question, but I watched a lot of Bitcoin miners and made a lot of money on the publicly traded miners who were just ripping from 2020 up until the better part of last year. Money was cheap. It was really easy to take on a lot of debt. A lot of these miners were very aggressively leveraged. And I want to just get your initial thoughts on what you're starting to see out of the mining space with some miners who've had this hodl mentality, have now started to have to capitulate slowly on just the Bitcoin they're holding first, not even going down the rabbit hole of having to unplug miners yet.
So there's a few things that occurred. One is that most
Ooh.
mining companies.
JP, your mic is hard to understand. Is there any way you can increase the quality?
Let me change it to the next technology. Let's try this one.
While we're waiting, I'll just do a rehash of.
Check.
Much better.
Okay, perfect. Awesome. It was in my AirPods before. So I was going to go with that question is, Bitcoin miners were all hoping for 100K. I think the whole community was. And so no one was selling coins. No one was thinking about treasury management. But the reality is we should have been putting cash in the books and saying, I'm no longer going to just commit to 40 cents a terahash. I'm making a ton of money. Now we're at 7 cents, 6 cents a terahash. Why did you not sell before? I think that's the first thing, is that capital management was just horrible for miners across the globe, especially the public guys. Second thing that happened was these public mining companies, they're run by a suite of management. They're not run by necessarily operators for most of them, or people who have done this before. And so some of these guys, they're experienced, but others, they're just, hey, I'm a manager. I'm going to raise the capital, have access to capital markets. I'm going to deploy the capital with a hosting provider. I have a higher electricity rates. I'm not fully integrated. And you're taking, like you said, advantage of the wave. So I think that the mining companies that are public are really feeling pressure. You can see that by the compression in their stock because of all the shorts and different types of capital partners that are placing against them, placing bets and saying they're not going to survive. So at the end of the day, these public miners really are in a tough situation. I hope that if they have a big enough balance sheet, they'll be able to get through it and weather the storm. The reality is most of them lock themselves into these long hosting contracts. We just can't turn off our machines. So we've seen machine prices crash, and we expect them to even go lower.
And so there was also a very aggressive, I think, forecast and expectation for what hash rate would look like by the end of this year. I mean, we're now in the second half of 2022. By my understanding, based on what the expectations were at the new year, where we're at right now, I believe hash rate is at just under 206 terahash. Doesn't seem like we're going to be getting to that 300 terahash marker that we were looking at. What are you attributing some downwind pressure?
Yeah, I would say for that pressure, and the reason why we're not growing as fast as we expected was, one is you have maybe 30% of the network is still older equipment, S9s, equipment running at 100 watts, 80 watts of terahash. That equipment is going to be shut off or is no longer available to operate or is not running. And so when that equipment's turned off, the hash rate's dropping, which is what we're seeing because the profitability is off. Second, the energy situation across the globe is challenging miners' ability to deploy new facilities. Deploying in Texas with ERCOT setting rules saying if you have a site bigger than 20 megawatts, you need to go through about a year to 2 year long process. These sites, when deploying hundreds and hundreds of megawatts, especially in the U.S., it's not as simple as, okay, let's start today. You have to put in a load study for electrical load to understand the grid impact. You have to get permits and the correct zoning to run these facilities. And those challenges are things where people can put a roadmap together and say, I'm going to build 500 megawatts. But there's a big difference between building 500 and just even building 100 because of all these different complexities. And so that's what I'm seeing across the market, is that these companies projected that they're going to have all this hash rate. And then when it came to it, they realized that there's a lot of logistical issues to deploy. And in addition, energy costs going up have made some of those sites that might have been attractive with the Bitcoin price going down not as attractive. And so those projects were put on hold. I know there's companies, public companies, that have tens of thousands of machines that are just sitting in boxes because they don't have places for them to run yet.
I want to take that. There are like 100 different ways we can go. I'm just letting you know at a certain point, I do want you to maybe walk our audience through the historical precedent of miners shutting down their rigs and what that actually is. Like, that is a very common practice during bear markets. And I don't want to dive down that rabbit hole yet, but I'm just saying it so that if in case I forget to just mention that story. But I want to talk about just the energy grids right now. We're seeing a lot of stuff coming out of Texas. You're bringing up the fact that, some of these mining companies are sitting on miners and have nowhere to plug them in. I mean, gas prices seem to be still hovering at all-time highs. The cost of energy is still slowly, surely creeping up. What, if anything, could possibly have to, or let me rephrase, is there a certain threshold on the upside for cost where, hey, this just is no longer sustainable? Like, this is something that we have to really reevaluate where we're getting our energy from to mine this, to mine Bitcoin. Is there a certain cost per terahash that you're looking at and saying, like, hey, at this point, this jurisdiction is out and we need to go relocate?
Yeah, it's a great question. So energy is a local marketplace, and Bitcoin created it into this global marketplace. And so the arbitrage that Bitcoin miners create or have is between that local marketplace. So for example, here I am today at one of our new facilities in Iowa, a 5 megawatt facility we're currently deploying. That energy price is between, let's say it's $54 a megawatt hour. Now, if you plug a new machine in, that machine has an efficiency rating of how efficient it takes that energy and turns it into a terahash, which is the output that each miner creates. And so that efficiency mechanism determines how efficient you are with that electricity. So you can have a higher electricity cost, let's say at $100 a megawatt hour, and have a very efficient machine, one of the newest machines, and still be profitable. If you have an older generation machine, you will no longer be profitable because how efficient you turn energy, the watts of energy, into the terahashes, it determines on the model of that machine. And so right now we're seeing that these local marketplaces of energy are having increases across the board, anywhere between 13 to 20% increases. Now this is coming from the local utilities outside of Texas, and then in Texas, even the markets there, because of natural gas prices, as you mentioned. So the local utilities provide energy to their customers with natural gas, gensets, and wind, solar, and coal. And so as natural gas increases, and even the components used to create wind and solar increase, the levelized cost of energy, which is the amount of dollars, the cost of energy creation, including the cost of the asset, rises over time. And so we're seeing that across the board here in the U.S. and then even in the world, outside the U.S. and in other countries, it's much worse. When it comes to what's going to keep a miner running versus what's going to turn off when it's become unprofitable, that's the nice thing about mining, is where it's this game of how efficient are your mining operations? Are you able to run through the summer without any heating issues? Are you able to have a low energy contract, or an energy contract which allows you to shut off? Or are you forced to continue to run because you've committed to that energy usage in something called a PPA, a power purchase agreement, where you're going to buy so much power every single day from the grid or from the provider? And so each miner has their own different flexibility and different optionality when it comes to running their facilities. When it comes to the terahash value, 7 cents, 6 cents, I mean, there's not much margin to be made when that terahash is that low, especially with the halving event being 2 years from today. I think that's the one problem, one of the things that people don't realize, like with Bitcoin, you can't just print money, as we know, but to create these new Bitcoins, you have to do all of this work. You have to deploy these facilities, staff them, keep these machines operational. That's day in and day out, thousands of people around the world maintaining the network, and each new coin is extremely hard to get. And so when the difficulty bump does happen, or when the halving does happen, it becomes twice as hard to mine Bitcoin. It requires twice the amount of energy. That's a massive input cost for miners across the globe, and we will see capitulation. So I would say Bitcoin would have to drop farther, maybe $15,000 and sit there before we see real capitulation. We already have gone from 220 exahashes down to 206 exahashes, as you mentioned. So we already are starting to see capitulation from older machines, but newer machines are still profitable, still making money. If they're covering their debt service and other fees associated with running the operations, such as their overhead, that's a different question.
I love that, the halving is something that you guys are paying attention to and considering. I want to get a sense from you, like how are you guys planning for, and how do you map out sort of I'm assuming there's a range of what you think Bitcoin's price will be to help you guys better gauge what your necessary hash rate output should be on the other side of the halving. Do you mind walking us through some of those just conversations you guys have internally?
Yeah, so internally you have your expenses at your facility, and those expenses will, when it comes to a mining facility, we just run through them. You have your lease, you have your internet, you have your trash removal services, then you have your staff, and that staff is the biggest cost for an on-site team. Those staff members, during a bull market, every terahash is worth more, so you might extend and have more technicians on a facility running and working, and then you'll bring technicians down. So even for us in Iowa, when we with the recent drop from $40,000 to $20,000, sadly we had to let some people go because of the reduce in hash rate. Now every terahash we have running, isn't as valuable, and so you want to make sure that you have this much daily profit from your mining facility covers your OPEX at the site. And then once you zoom out from your individual site level, you have your debt obligations, your insurance obligations, your management team, your accounting, your back office, your sales. All of those costs are also then piled onto the operation itself. And so in a halving event, we see, or as we prepare for the halving, you want to keep as many staff as you can to move forward. But there are times when you hire staff and it's like, hey, we're going to hire you. We're going to commit to 6 months because that's where we need your work right now as we move into this bull market, or as we move into closer to the halving. And we know that our hash rate is going to be significantly worth less after that event. When it comes to capital management and that strategy, it's really understanding of when do you want to be putting cash in the bank, which is when Bitcoin terahashes are 48 cents a terahash or Bitcoin's $60,000. And most miners, including ourselves, didn't prepare well enough so that now when it comes closer to having, the ones who did prepare themselves, who have cash on their balance sheet and who are ready to deploy that capital into the mining space, when the price of these machines drop significantly lower, now it's a great time to put the capital in and to buy machines that were overvalued previously, because a machine's cost is effectively what it can make in about a year and a half of production. And so machines prices, we've seen them capitulate. We expect them to kind of flatten out, maybe go a little bit lower here. But when it comes to the capital management, treasury management strategy, we are estimating, okay, if terahashes stay at 7 cents, what does that look like on our balance sheet? What does it look like on our cash flow, more importantly? And then if a terahash goes to 4 cents, what does that look like on our cash flow? And it's a huge difference from 10 cents to 5 cents. I mean, when it comes to your energy costs, most miners, I would say, are profitable at 5 cents a terahash on energy, but then after that, you're gonna have to start shutting off, and that's with new S19s. And so we are all, as a mining community right now, I would say, feeling the pain of the price of Bitcoin being lower and not having these new Bitcoins that we're generating being worth as much. But that's part of the game, and that's part of stacking stats in the long term. For me, this is my 3rd cycle going through this, so I was able to prepare a little bit better than others and to be able to allocate capital so that we can grow.
So what are some lessons from the past cycle that you've learned that you brought over into this cycle that helped you and your team be better prepared?
So I would say they come down to most of the lessons we've learned come down to the management of the facility. So when you're running a facility, having your asset management database, when you are operating a facility, making sure you're running your technician schedules properly, having the SOPs and procedures to keep machines up, replacing your power supplies, your fans, your control boards, making sure that those technicians go through an onboarding and training process, ensuring that your facilities can remove heat properly, and you have proper infrastructure where you're not fighting against the summer heat, and that you've designed it properly. So we've had multiple summers to work through that on some of our sites. And then when it comes to capital management strategy, it's knowing when to exit machines, or when it's good, and when you're selling machines, to put some cash away so that you can deploy it into new crypto, you can deploy it into new facilities. So for us, we're constantly deploying. We have another 10 megawatts here in the pipeline in Iowa, and then an 80 megawatt site we're working on. It'll be up at the end of the year, and those projects are still going on even if the Bitcoin price drops, because from our perspective, from a longer term investor's perspective, we're still mining Bitcoin at a discount. We believe that even though it might be a small discount today, that in the future there will still be that arbitrage, which we see in commodities, which is the commodity price will have there'll be a flat price in commodities, and a flat kind of cost to produce the commodity will be about the same price as what the cost of the commodity is, what the commodity is trading at. But what happens is when that commodity does run, we saw this over the past couple of years with steel, copper, and other commodities and rare earth metals, is that when that commodity does run, it runs much faster than you can actually deploy new exporting hardware. So in this example, new Bitcoin miners to export that commodity. And that price differential is where Bitcoin miners make the most money, is when the commodity rushes up. So when Bitcoin prices increase rapidly, and when new production takes a while to get online, and then when everyone wants to join the space. You definitely have this hot and cold mentality in the mining space where it's super hot, everyone wants to get in, and everyone's talking about it, as we saw with the public guys, and then it's really cold, and there's people are scared, people don't want to make large capital investments that are capital intensive and can take 6 months. And so for us, our team, we're continuing to push forward, continue to make those capital investments because we do believe that spread will exist there in the future.
Would this be a fair way of sort of rephrasing what you've just said, in that it's almost like you guys are trying to build out the infrastructure and the entire supply chain now during the bear market, so that by the time the bull market comes, you may not necessarily use the whole network today, but you will use the whole network and then need more anyways come the next bull market?
Exactly. So even if we're not buying machines today, we're still allocating capital to that bottom 20% of the stack, which is the infrastructure, and getting that infrastructure purchased, getting those transformers ordered, doing our groundwork, ensuring that we can have capacity for when the bull market does run, and clients or ourselves, we need to deploy more capital into the mining units themselves.
So let's talk a little bit about individual miners, because I'm a selfish piece of shit, and to be honest, I view the big miners as potentially the bad guys, but I don't know, maybe I'm just trying to say some things to boost our ratings. For someone like me, an investor type who, I pore over term sheets and I pore over earnings reports, what are things to pay attention for that will signal weakness in a mining company versus some things that will signal strength in a mining company? I know you mentioned something like having cash on reserve is one of those things. Are there other things or clues?
Yeah, I would say there are petahashes under management that are actively running, or their Bitcoins mined per month. If you're seeing a significant drop in Bitcoins mined from public companies between June and August, or June and September, or May and August, that's because their facilities aren't able to handle the heat. So that would be that means they're going to have to invest more capital in order to get those facilities to keep the hash rate up, and that their hash rate is dropping. That's one of the things you can look at, is their net Bitcoins mined. I would definitely understand their full cost of production of a Bitcoin. So not only their energy cost, which is important, but their management salary, what is the board getting paid? What does their middle management look like, or their office? How efficient can they run their operations? So that's all super important. And then understanding for the public companies how much they spend to build these facilities. Some of the public companies are spending millions of dollars on immersion per megawatt hour or per megawatt to build it out, and that's pretty substantial for for a machine right now. That if you're spending $3,000 to build out the spot space for an immersion setup, but you can buy the same machine for $3,000, well, now it's like maybe this immersion plan wasn't the best route, because these machines, I'm spending double the money to get maybe 30%, but I could actually run 2 servers and get a 200% increase for the same cost. And so looking at the cost it takes, the amount of capital it takes to run the racket, what their ancillary expenses are outside of their energy usage and energy costs, and then also how secure their energy contract is. Are they running their own facilities? Are they vertically integrated? Do they have their own energy source? Or are they just buying from the grid? Or are they just buying from, not even the grid, but buying from a provider such as Compute North or Core Scientific that's actually providing the services? Well, now, what is their edge? When Bitcoin mining, when there is blood on the table and the price crashes, it's the first people to shut off. The first people to shut off are the ones that have to turn off their operation and sometimes even default on their power bill if they're unable to pay for it, which would then result in them losing their machines. So hopefully that doesn't happen to any of the public companies, but if it does, we will definitely hear about it, and we'll end up in a large lawsuit, because in these hosting contracts, you're committing to power usage for a year, 2 years, 3 years, and some means you cannot turn off your machines even if they're unprofitable, which we haven't seen yet, but we're getting pretty close, especially for newer machines.
So let's go down that rabbit hole, because that's a statement you hear a lot. I was in spaces last night from the Blockware Solutions team, and I heard them this is a phrase and a statement you hear a lot, that the final sort of marker of a market bottom in past cycles has been miners having to shut off old machines. Can you walk us through, for the newer people? I'm class of 2019. What has that looked like in previous cycles, and what are your expectations for what that is going to look like in this cycle?
So in previous cycles, what that has looked like is machines that have that wattage to terahash efficiency that is based on the machine age and manufacturer when it came out. So for example, an Antminer S9 came out in 2016, and those machines are 100 watts a terahash. Now, those machines turned off when COVID hit the markets in 2019 and Bitcoin price hit $3,000. Even ourselves here running at 4 cents, $40 a megawatt hour at that site in 2019 before energy prices started increasing, we had to turn off, because you run the numbers and you're like, well, I could either spend the $5,000 to buy Bitcoin today on the market, or I could spend $6,000 to buy energy to generate $5,000 of Bitcoin. Now, the thing that home miners, I would say, is different than institutional miners. Is from a home miner, yeah, it's okay. It's one machine I can keep running. But when you have thousands or tens of thousands of servers, that percentage difference of loss of profitability, you cannot keep running. You just will be burning cash. And so effectively, in a hosting contract is where you're committing to the client, the hosting provider, that you are going to use this energy. So that means no matter what happens to the value of a terahash or the price of Bitcoin, you're going to consume energy. And so you're going to be paying $6,000 to make $5,000 of Bitcoin. Now, if you're a well-established company and you have cash on the balance sheet and you can weather the storm, well then yes, you'll be able to continue to run and pay those bills and just suck up those costs and run those machines and make your contractual commitments. But if you weren't planning and you're, let's say, a medium-sized miner where you might have 100 or 500 machines and you don't have the cash balance sheet to come in and make those payments every month, and then in addition to covering your debt payments, your machines will will be seized by either your debt whoever gave you the debt or the hosting provider. And that hosting provider has every right to take those machines in most contracts if you do not pay your bill. And so that's what the scenario, how that occurs. And so in 2019, when the price dropped to $3,000, it might have only been a week, 2 weeks when you were really unprofitable, but other people could have been unprofitable for months because the price didn't rebound immediately. It went up a little bit, but it still sat at $6,000 for a while. And we saw capitulation across the market. We saw hash rate dipping. And that's one of the things I would suggest people go look at, especially if you're new to Bitcoin before 2019, is look at the Bitcoin difficulty chart or the Bitcoin hash rate chart back when the price had crashed during COVID, and then back after the 2017 crashes. Even after the price crashes, Bitcoin miners are still building. Difficulty is still going up because of the longer capital spend process and the capital allocation process that we have to make. Is we're not able just to stop projects instantly. And so miners are continuing to build even when the price is dropping. And at some point, the market capitulates, and you'll see that on chain, and you'll know it's starting. Miners now that are continuing to run are going to start stacking more and more Bitcoins. Even though they're going to be worth less dollars, they're still going to be more Bitcoins. And the belief as a miner is that those Bitcoins are going to be worth more in the future than they are today.
All right, I lost my tab for a second. Why, I have a problem with something that you said, and it just might be because I don't know this stuff well enough, so forgive me if I'm misinterpreting this. At the time the Bitcoin went down to 3K in March of 2020, I believe, if I'm not mistaken, the block reward was still 12.5 Bitcoin. So if you're spending $6,000 for potentially one block over the course of the next year, that seems like a far more lucrative payout still. Obviously, there's no guarantee that you get that block. So is that part of that calculation then? That there is this level of risk that you could spend the 6,000 on the cost of energy to eventually get nothing?
Not even saying you're mining the block solo mining, simply saying you're pool mining. And so what happens is the value of that terahash and how efficient your machines are result in it not making sense to mine Bitcoin because you're going to spend more dollars on a day-to-day basis. Let's say every day you're paying your electric bill than the Bitcoin is worth that day. So for miners who run their own facility, it makes more sense to turn off their machines, take the cash they were going to send to the electric company, and simply buy Bitcoin because they might get 10% more Bitcoin buying it on the exchange, creating upward mobility or upward pressure on the markets, versus paying the energy company $6,000 or $5,000 worth of Bitcoin. You can stand by $6,000.
PocketWatcher.net.
What's going on over there with your channel, man?
Man, nothing much, man. The housing market is still doing bad. And everything is, right now we're starting to see a lot of price cuts. We're starting to see, realtors tell their clients like, hey, look, you could have got the bag at $200,000 over asking price a couple months ago, but now if you want to get anything close, you better sell right now. So we're starting to see a lot of that stuff happen.
And come down a little bit.
Yeah, it's coming down. So
what you thinking timeline wise? I'm not gonna make you pick a exact day, but if someone had a little money set aside and they're looking for a new home to buy, What's the timeline you thinking that where it would make sense? Because you're not in a rush. This is a person that's not in a rush. They can take their time.
I would say it'd be closer to the end of the year, but for sure, on the safe side, I would say next year. Beginning of next year would be a good hot time, because I believe that we'll really find out where the economy is when those shopping seasons come around, when those Black Fridays and all that other stuff. And once you hear, on NBC or Fox or something like that, and they say, Black Friday, the worst Black Friday that we've had
in the last
10, 15
right?
Yeah.
Okay.
That's when you know it's cracking. That's when you know it's cracking.
Okay, that makes sense. That makes sense. All right, so here we go. It is Wednesday night, and clearly we got the phone number there, but give us a second. Me and Orlando, we're gonna react to a little content, and then I'm gonna give you guys the heads up to go ahead and start calling, and I will start taking on calls, and me and Orlando will field you guys questions. But let me bring up to the stage the subject matter of tonight. All right, so here we go. There was a clip, and of course, this is what happens, people. You pocket watchers, you send me clips. I do not ask for these. No, I really do. I ask for these clips. Continue to send me these clips. I'm just joking. No. But I'm not the one looking and going to every YouTube channel and every Instagram page looking for the content. The content comes to me. Right? The content comes to me. Why?
Look at that.
Why? Because we have many pocket watchers out here who know when they hear something that sounds a little off. And what they'll do, they will tag me in a post. They will DM me. They will email me a clip. And this is the clip that I got. So me and Orlando will watch it. We'll go back and forth a little bit and give our commentary on it. And then we're going to open up the lines and give you people out there, you viewing public out there, an opportunity to call in and let us know what you're thinking. But here we go. Let's play this. So this is 19 Keys. I'm not exactly sure what this brother's job title is. Not a shot at him, but when I look through his information, there's many things that he talks about, right? Let's be clear. Let's be clear. This is not a personal shot at the brother, but it's just like the range of topics that this brother seems to be an expert on is so far and vast that you can't put this brother in a box and say he's an expert in such and such and so, right? Like me all day, I'll admit, I'm a financial advisor. I am a licensed financial advisor. I'm a certified financial planner. That's what I do. I went to school for this. I passed the exams, graduated, then went on to get my various licenses and got certified as a financial planner. If there was one thing that you're going to point at, it's going to be my expertise in personal finance. That's me.
Right. That makes sense.
19 Keys, on the other hand, this brother has no limits. You can't put this brother in a box.
He not even stopping at 19.
Listen, no, this brother, he can talk about any subject you can imagine. I mean, this brother, I remember I saw one video. I swear. Now I could be off, Orlando. So don't hold me to this. This could be, just hyperbolic. I could just be going off, something. But I swear I thought I saw this brother talking about, where your consciousness goes when you go to sleep. Like the different astral planes and all. I mean, you can't put this brother in a box. But today we will be reacting to a clip of him giving some financial tips, some financial literacy, education, advice. Yeah, we'll see.
Okay.
We'll take a look at it. But yeah, you can't put this brother in a box. He can talk about any subject whatsoever. But here we go. Here he is.
What you gotta say?
He's got the whiteboard. And listen, man, I'm not a big fan of the whiteboard. Not a big fan of the whiteboard. Now, I understand that, it brings the imagery of a teacher.
Yes.
But the fake guru has destroyed the image of the whiteboard and the black marker.
Right.
Whenever I see a brother starting to teach with the whiteboard and the magic marker, my antenna go up. My fake guru antenna go up. Now I'm not calling him a fake guru. I'm just saying in general. Whenever I see him with that marker and that board, I hold on to my wallet. That's what I say. Whenever I see that,
that makes
wherever
sense.
my wallet is, I'm clenching it tighter when I see the board, because there's something about that board that gets me a little off. But here we go. Let's see what's going on. Let's play this. It'll help if I unmute it.
Lesson right now.
Here we go.
You're getting a free financial literacy lesson right now.
All right. Free financial literacy lessons.
Free.
Here we go. Got my notepad, got my pen ready. Let's go.
So we don't want dollars. We don't want to keep our money in dollar bills. That's why if you got money in the bank and people flash money and show money, it really shows that you're a fool and you don't understand money.
Okay.
You understand me? Because you're losing value by holding it and having it in this asset class, right? But if you want to make money, that's a different type of conversation.
All right.
So if I got my money into crypto, right, and let's say that Bitcoin is gonna give you understand me? I think Bitcoin had 80% return this year. I think it did a solid 80% return.
Okay.
That automatically would have clicked to you to say,
This year?
oh, I should put my money in Bitcoin versus the bank.
He's not talking about this shit. Can't be this shit. Can't be
Okay. Hey, I'll let it go.
We'll get to that point. Don't worry about
Okay.
it. We'll get to that point. I believe this video was uploaded early this year, like January of this year. And that's a good point. That's a good point. We'll get to that point, but this was around January of this year.
Okay. Bitcoin is going to be more efficient.
More efficient.
You're getting a free financial literacy lesson right now.
It's going again, but this time I'm gonna pause.
Dollars, we don't want to keep our money in dollar bills. That's why if you got money in the bank and people flash money and show money, it really shows that you're a fool and you don't understand money.
All right. So I'm gonna pause right there, and we're gonna break this down. Okay. I'm going to give him a D plus on that statement. Okay. Not an F. Not an F. He didn't fail. I'm gonna give him a D plus on that statement. And let me explain why. When he talked about keeping money in cash and how it loses value. Okay, yeah, through inflation, yes, money loses value. But the point about not keeping money in the bank, that's why it's a D plus. And here's why. You have to understand the audience that he's speaking to. Okay? Understand the audience that he's speaking to. Now, I know the numbers. The average person does not have enough money saved up to cover a $500 unexpected expense. That is what the Federal Reserve, that's what the Federal Reserve here in the city of St. Louis, they did that study, and they basically say it was 400. I'm rounding up to 5. The average person does not have a $500 set aside for an unexpected expense. The audience that he's speaking to actually has a lower income than the general population that study was on. Okay, but I'm even gonna take that off the table and say no. I'm gonna put them in the bucket of $500. Right? They don't have the $500. Now they could possibly be in a situation where they don't have $300, but I'm gonna put them in the bucket of $500 just to be fair. All right. So if you don't have $500 set aside for an unexpected expense, you don't have money to invest in cryptocurrency. Inflation is one of your backdoor problems. That inflation is so low on your list of problems. If you don't have $500 for an unexpected expense, you shouldn't be worried about inflation. You have another problem that you have to deal with. So that's why it's a D plus. Because in a general sense, if I check box the first steps that I have to do to be financially free, to be financially stable, then that part makes sense. But here's the steps you have to take before you get to that point, okay? Step number 1, you need an emergency savings fund. I say this all the time, but I'm gonna keep saying it because you people ain't doing it. You're not doing it. Right? The studies show you're not doing it, so I'm gonna keep saying it. You cannot invest money in the traditional asset classes. So we're talking about stock market, real estate, that type. You should not be investing money in the traditional asset classes until you have an emergency savings fund set up, let alone an unregulated asset class like cryptocurrency. That's lower tier, not lower tier in quality. Because I know the crypto mob is gonna be like, no, crypto is the greatest thing in the world. It's the greatest wealth transfer that's ever gonna happen. Okay, cool. Calm down. Take a deep breath. Relax your fingers before you start spamming the chat. What I'm saying is based on the order of operations. Do y'all remember math class and there's an order of operations? Check box the first steps that I have to do to be financially free, to be financially stable, then that part makes sense. But here's the steps you have to take before you get to that point, okay? Step number 1, you need an emergency savings fund. I say this all the time, but I'm gonna keep saying it because
Keep saying it.
you people ain't doing
Right.
it. You're not doing it.
Right,
The studies show you're not doing it, so I'm gonna keep saying it. You cannot invest money in the traditional asset classes. So we're talking about stock market, real estate, that type. You should not be investing money in the traditional asset classes until you have an emergency savings fund set up, let alone an unregulated asset class like cryptocurrency. That's lower tier, not lower tier in quality. Because I know I know the crypto mob is gonna be like, no, crypto is the greatest thing in the world. And it's the greatest wealth transfer that's ever gonna happen. Okay, cool. Calm down. Take a deep breath. Relax your fingers before you start spamming the chat. What I'm saying is based on the order of operations. Do y'all remember math class? And there's an order of operations. When you see a complicated math problem, there's certain things you do at a particular order so that you can get the problem correct. Well, when it comes to personal finance, there's an order of operation, and that's what I'm teaching you tonight. Order of operations for your complex financial life, how to get the problem correct. Investing in crypto when you don't have $500 saved up is out of order. All right, here's the order. Emergency savings fund. Pay down debt. Invest in the traditional investment asset classes.
Yes.
Then you have room within your portfolio to go ahead and invest in the non-traditional asset classes. So he gets a D plus on that.
Yeah, and see, this is the thing that I'm saying, and I'm only speaking from my perspective and what I see. When it comes to crypto, I see a lot of people deciding to get into crypto and saying first that majority of the people that get into crypto do not believe in the fact of getting rich and making money, that they believe in the technology so much before the making money portion of it. Okay. And I find that that's not true, obviously. That most of the people getting into crypto are getting into crypto because they want to buy something that's really cheap and low, and they think it's going to do 1,000, 2,000% return, right? Going to the moon, and they're going to become rich off of it, right? So hence Dogecoin and all this other stuff that's going on, right? And like you said, the most important thing to do is to make sure that you have your emergency savings fund. Make sure that you invest, if you're going to invest, to do the traditional ways. And then if you got money left over, then go into that. But the main reason is that we're giving this, not because we're trying to be haters on crypto, but because it's extremely volatile. Right? Why would you go ahead and take your money that you've been saving, basically your life savings, right? Your life savings.
Oh, most people, yes, it's their life savings. Yes, go ahead.
Exactly, your life savings, and then you save. You got your money in your savings account, and then you have the rest of your money, which is part of your life savings, and then you're gonna drop it into an investment that you can lose all of it before you even go unregulated. Before you even go to sleep, when you wake up, it's gone. Why would you do that? Why would you do that? But I get it.
Yeah, it's the sale and the pitch is if you put it in, it can go ridiculous. It can go. You can be a millionaire overnight, and they'll talk about that one guy, that one time who did it, and everybody else, you're missing out. It's like, hold on, slow down.
That FOMO will kill you guys. I'm telling you.
There's always more people who took an L than one. They don't go around interviewing all the people that took an L. Sometimes most of the people who took an L, they take their L silently and walk away. They don't know what to. They take their L and they walk away real quiet. And the issue comes down to, it's like, listen, I own crypto. I've got money in crypto. I've probably got more money in crypto than some of the biggest pro-crypto people in the comments. That'd be the funny part. I've probably got more money in crypto than the people who think I hate crypto. The difference is perspective.
And I'm the same way. Same way.
My crypto holdings is less than 2% of my overall investment portfolio. It's an amount of money that I forget about. About it.
Look, this is the truth. This is 100% the truth. I have money invested in crypto, but I just remembered it just now we were talking about it. Like,
there's days I forget because I don't check it. Because it's an amount of money that if it goes to zero, it's not a big deal to me. But if it goes up crazy, then there's some upside there. But I don't even check it. So when I hear, oh, it's up to this, don't even check it. It's not a big deal. This is money that I don't need to use for the next 30, 45. This is really money I will never need to use. Let me be completely upfront and honest. This is money that I never plan on actually using. unless for some ridiculous reason it just goes crazy and I know the market is overpriced and I go ahead and sell.
Yep.
But I'm never going to use this money. But it's perspective. It's probably more than most of the trolls who say that I hate crypto, but it's such a small percentage. So that's why, because I did all the other stuff. I did the order of operations correctly. That's why it's not that big of a deal.
I was just a couple of days ago. I was watching this guy on YouTube. I guess he made like a bunch of money off of Dogecoin, right?
Okay.
And well he didn't make it. I'm sorry. Let me take that back. It was on perceived, right? Like he had it on his phone. It was on paper. It was on paper, right?
It was digital.
Right.
Yeah,
digital, right? And so he was $1 million and something over, and he did a video where he said he regretted not selling it because now it's all the way back down to what he invested. He invested like 200,000, and it went from $1 million and something, and he didn't sell. He said he's diamond handed. Right. And he said he regrets it. I regret. Like, really?
Of course.
Like, he said everybody told him to do it, and he was just like, no, it's gonna even go further. It's gonna go up to $1. It's gonna go up to $2, $5. He just thought like $1 million wasn't enough for him when he invested, which is already crazy. I couldn't invest $100 and something thousand into some Dogecoin.
It's something like that. That's ridiculous. That's ridiculous. That's ridiculous.
So not only did you risk that and then you win, you don't even cash out on it.
This is a person who snatched failure out of the jaws of victory. This guy, you won. You beat all the odds. You did the most stupid thing that you could do and somehow was rewarded. And instead of cashing out your chips and walking away the victor, you doubled down and lost it. You doubled down and lost it. That's why you always have to have an exit. In a speculative investment, you gotta have an exit. You gotta have a number where you say, if it hit this number, I'm out. And you gotta be at peace with that. If it hits that number and it goes even higher, you still gotta be like, hey, I won. That's the number I wanted. But if it hits that number and goes down, then you win. So you gotta have a number before you put your money in. You gotta have a number where it says, I'm happy if it gets to here. And that's on speculative stuff like
right.
But let's get back to this video here. Yeah, we got a little bit more to dissect. Y'all can go ahead and start calling. Give us a call, 515-602-9778. That's 515-602-9778. All right, here we go.
You understand me? Because you're losing value by holding it and having it in this asset class.
What it do, family? Peace, blessings, man. Good to see y'all, man. You're looking beautiful. I see you. You're looking beautiful, man. Good. The energy in here is looking great. You understand me? I want to lock in a few things, man. My topic.
It's that Red Panda Anthem. Ian, what's up? Red Panda Anthem. Red Panda, what's good? Red Panda Anthem.
Let's talk crypto. This is Crypto Corner, not sponsored by Coinbase or Crypto.com. But since everyone like, yo, Ian been hanging with Keys 3 weeks, and all of a sudden he Dr. Umar Ian Smiley Johnson. Great.
What a night.
Then I said, hey, man, black people got talked into buying Boy Day Yacht Club, and they're using us. And then people in the comments were saying, no, majority of Boy Day Yacht Club is owned by white men, and no one's using black culture. You're using black culture because you charge black people, even though you do the show for free. And your work, 90% of my work goes into doing the show. I'm like, damn, I really want to have sex tonight. You got to work on this outline. Lord knows I read the class. Hey,
Ian, real quick. Speaking of NFTs, let's just go into the earnings report. Really quick.
No,
real quick. It's gonna be 30 seconds. It's 30 seconds, and I want you to keep going.
But I don't want to say this after it affects.
No. All right, you go.
Okay, yeah. So I told you guys that the Boy Y'all Plug thing was racist. Y'all say you're crazy. Great. It's not my page. Everyone in crypto know about this. Go to and I'm putting it in chat. www.bordengoner.com has a page-by-page breakdown of how they took Nazi Germany imagery and Nazi party regime imagery and made literally the outline for Bored Ape Yacht Club. I want to say this too. Last thing, then we go to earnings report. Yeah. I want y'all to stop telling me that I don't know about something, because two, it's going to make me do one or two things. Well, both. I'm going to learn more about the space you say I don't know, and I'm going to take this shit right to these funds, and then they don't give me the data I need. So y'all call me SoL whatever you want to. Citadel, please call me back.
Please.
President,
Please.
Meeting, line them up.
Please.
I'm going.
Please.
Great. Take that. Can we do Bad Boy Hedge Fund Academy? Hey. Look,
After Capital Press.
I ain't said the other one, because I got a bomb I want to drop. Boy, Wojciechowski, boy, I'll have your job tonight. The shit I know. But go look. Since Ian's so crazy, so here, okay, so y'all say y'all never invest in prisons, right? Yep, if you black. Then if you bought a Bored Ape Yacht Club, you are funding neo-Nazi shit right now. But don't take it from me. Take it from someone that is of a lighter hue and different continent than me. This is just entertainment, sponsored and only thought of by Ian Dunlap and Red Panda and Stock Club. The Red Panda Rebellion has nothing to do with Earn Your Leisure, assets over liabilities, or partners or affiliates. Only me.
Thank you for the disclaimer.
The Red Panda Rebellion.
I like that.
The Red Panda
Come
Rebellion.
on. But hey, they got gold grills on monkeys and got black people to buy monkeys. Like, yo, it's artistic. If I did that shit, y'all be like, you and Jay Morrison, the biggest scammers to ever touch the land. I said it, not them. Red Panda, sue me if it's an issue. I got the money to fight it. Shout out to Ally. Earn Your Leisure assets. So I'm on Dame
said, let's
night.
go in the background. That's hard.
Keep telling me I know something. Man, most of y'all wouldn't even write, and I'm not talking to all our people. I'm talking to those who say I don't know, and you come and back my motherfucking case. Dog, some of y'all who saying the same thing I'm saying word for word 2 weeks later. And the truth is, there's no competition in finance. So remember, because this is not me being humble, this is performance art. Because when I was quiet with the glasses on, for the views, loading a bitch. And even in business, please write this down. Sometimes you have to make people hate you to then win them over to then love you. That's what the performance art. I know, but you think I'd be that mad about what people say about it? But I was investing in 2008. I don't give a damn what nobody say. My baby, y'all see how good my baby be looking? Skin be glowing. He don't put no tatcha or nothing on his face. That's just him. You see how Shawty and Troy kids be looking? Then you'll be happy as hell everywhere we go.
Natural fruits and berries, man.
Nothing but juices and berries. This is just entertainment. And if y'all like my performance tonight, please put yes in chat. That deserves supporting the shit.
Ian, that deserves a hell yeah.
But when you get back off, oh man, wait till I talk to Dame and then I get one more FaceTime with Joe. I'm gonna come on and be crazy.
Hell
I'm gonna fade the black. Let's go.
There you go.
In other news.
Legendary turned into an impromptu TED Talk.
Yes.
Stood up and everything.
They actually had the curse. They had the curse counter on you, Ian. They had the curse counter on you. I think we got up to 7. So that is a low for you in one of these. So shout out to you for moderating yourself.
It's even with, I'm gonna be real, like even with that, if I'm like, okay, well technically the feds are gonna taper back bonds in June, and as a result, the crypto market's gonna fall 13%, and then S&P is gonna dive down. Y'all see that all the time on every other channel. Sometimes the truth sounds foreign because you are being lied to so much. Realize that schools, institutions, banks, crypto.com, NFTs, hedge funds, financial influencers, and please stop calling me a financial influencer. I'm a master investor. I'm here to serve the people. If I made you money, please put yes in the chat. This might be me. And then the Lord said on third day. See, I grew up a place.
I'll wait.
Right?
I'll wait. Put yes in chat.
And even with the NFT and crypto space, if I pumped some of these and they fell apart, y'all be hoping that 2 Tech 2 Index fell apart. And I told y'all NFTs were going to fall apart. Man, Ian, crazy as hell. You notice when I say these outlandish statements, this is how you really know. Gary V, Mike Novogratz, Citadel, BlackRock, Bank of America, kudos to you, Brian Moynihan, I appreciate you. State Street, and no big institute, Bonwin doesn't say. Because if I was wrong, Josh would call me, or call Shotty, or Bonwin would call me and say, dog, you off base. You wrong about this one. I know where you was going. When I had a meeting with us, I said it before, and I'm going to say it quietly. If some of the people that are trying to teach you about investing are so great at investing, why haven't BlackRock, State Street, JP Morgan called any of them? They can tell you, well, it's because I just choose to stay here and I don't want the chance to work with the hedge funds and banks. I'm like, but you working with the feds. You work with the feds, but not with black.
Yo, let's go. Let me go to the.
Can I just get these like
This is just for
alphabet boys, like shout out to Free the Guys, Free the Guys. Real quick, Ian, because like you see, the feds, that's different. I'll be fresh as hell if they watching. But look, tomorrow, Salesforce, CRM will be reporting their earnings.
I love Salesforce.
Yes. And I know we were talking about NFTs. And so GameStop, I know they announced that they're going to be working in the NFT space. They will be reporting on Wednesday, obviously a company we spoke about in detail here on Market Monday.
Can you say the company again?
GameStop. That was GameStop.
Gotcha. Okay.
And then Thursday, one of my favorites, and we spoke about over the past 3 weeks, and me and Rashad actually had a conversation about the cybersecurity space, and one of the companies that is leading that sector, or that said CrowdStrike will be reporting on Thursday, and another strong company in the athleisure wear that had a strong run since 2017, Lululemon, will be reporting as well. Another very strong company. So those are a few of the companies that are reporting this week. Obviously, it's a short week because the market was closed today. So keep your eyes on those.
Another thing. Another.
I'm happy when I make you laugh. It was two moments. Investor came out the side of the stage, and he was like, "Yo, yeah, co-following." And when I get a couple of these jokes off, you start laughing. I'm like, "That boy good." I used to wreck Shotty nerves on the show later. Boy,
it's entertainment. It's all entertainment.
It's just entertainment. Charleston White told me. Charleston White was like, "Yo, the mistake that you made, you came out trying to be a hero. Anytime you're trying to be a hero to the black people, at some point the black people want to kill you. I could have came out being a villain like me."
You spoke to him?
I'm sure to coming back soon. Let's talk.
Oh man.
Yeah, I called the cops.
Shout out 600 Breezy. Shout out 600 Breezy for. You know.
You damn right I called the cops, man.
The next three major stock splits. Amazon, June 6th, 20-1. So that'll make his stock around $113. It's like $2,200 now. Shopify
10-1, right?
10-1.
Yep.
Not a lot of people talking about the Shopify.
Nah, 10-1 is good.
10-1, and that's gonna be on June 26th. So that'll turn his stock into around $36 a share.
Oh, they need that.
Yeah, and then Google, of course, that's July 18th, 20-1, and that'll turn his stock into around $112 a share.
Yeah.
So
the order in which you guys should buy these, Mike, put this up, please. Google first, then Amazon. Shopify is third. So it's not a superstar. We was having a conversation yesterday if Jason Tatum is a star or a superstar. I would say no disrespect to the god, but Shopify right now is Tyler Hero.
Is
Tyler Hero, who didn't play in the second half yesterday?
Shopify playing well, and it was my baby, one of my picks.
Yeah.
Trust me. Google, Amazon. So anytime that quantitative easing ends, which is just the Federal Reserve putting in money into the market, once that stops, you really get to see. Like same thing, and I posted before, and I'm not doing my Derrick Jackson thing, but when a man money leaves, then as a man, you get to see what women liked you for you versus what you could do versus potential. Everybody cute when the money flowing. What happened as of recent, and then June, that's when it's different when the money stopped coming in. Then like June for the Fed, bond market is gonna go in overdraft. So then you got to pull the baby, can you slide your debit card underneath the table so I can pay and feel like a man move, right?
When the money goes, what a honey stay.
A honey stay. So if the bond market is down, and then I'm telling you, housing market is going to crash, it will recover. And if automotive payments for used cars are going down, the startup scene is being affected greatly. Please sit back down. So when I stand up, I'm mad for camera. And when I sit, I'm calm and appreciative. If you've enjoyed this episode of Market Mondays, please put yes in chat. We do cash up at the end. But if the bond market, Chad and Corey both told me to be more entertained. Man, Corey, you know how Corey be. Man, if people can't relate to all the nerd shit you be doing, I'm like, okay. I want to give y'all a little bit more pizzazz. But if we look at the market in its entirety, if we look at, let's say, the 30-year treasury, and if we do fibs from top to bottom, shout out to my traders, right? We are at the 50% retracement since 1998. What that means is the bond market has been cut in half from the all-time high, and it's back to 7 or 8 year lows. That's not a good thing. So when I'm telling you, there's a difference between traditional advice, hey, have diversification. That's like when, fellas, you ever ask a girl, baby, you like me? And she like, let me get to know you. Maybe, you can grow on me. That's no. The diversification. See how Janet laughed? And Janet don't. That's for none of my BS. But that's truth in that, right?
Don't tell son.
If it's not a definitive yes, it's no. So when you're asking people, ask your advisors. All of you who have advisors, have you heard more from us on Market Mondays or your advisor? Somebody asked me this, how do I know if my advisor is leading me right? Number one, hey, advisor, can I see your account, what you're invested in? Because what they're going to tell you to invest in usually is different because they have different risk parameters. Also, too, they don't want to get fired. Number two, can I see your account? Those are the telltale signs. Traditional advice, like buy anywhere, dollar cost averaging doesn't matter, price doesn't matter. That's great when quantitative easing is in effect. When the money goes away in the market from the Federal Reserve, which a Federal Reserve is a private entity operating in the United States of America that sets policy for us, they are our financial parent. So if my mama and daddy back in the day say, I ain't got it, boy, all my little dates when I was going to Showtime, going to see Fast and Furious 2, they weren't going there. It's the same thing. So if we look at the crude market, crude is at 117. That is 2011 levels. If we get back to 139, we are going deeper in a recession. That's why I say there's no such thing as a bad market, only bad entries into it. If interest rates are high, invest in the oil and energy. If interest rates are low, then you want to invest in tech. That's why I told you, 2 tech, 2 index breaks down at 15%. But let's say in the index is S&P and that, or S&P 500 and Dow. If all of the tech companies go away, what happens? The smartest people in the world say, let me put these companies from here to here. And they'll replace them, and you don't have to do anything. Just like if I act crazy and these numbers not good on the show, and at the live show, and on our deals, boy, you ain't gonna be out of here. That's what I'll tell you. You see they ain't say no?
Not true.
Every entrepreneur, write this down. Your job is to be the #1 star on your team at all costs. That's the only way you can avoid getting replaced. 19 keys and numbers he doing? I said, boy, what algorithm you got? You doing NBA young boy numbers. Teach me. I'm over with the shot. Hey, tell my brother, your vidIQ too, buddy. I'm like, he's got all that. He got Google buddy, Facebook buddy, right? Business owners write these lessons down, and even in how you deliver information, it still has to be entertaining for our people. Because if I said we have capitulation in the market as a result of quantitative easing and initiatives that Obama put in with the Fed, you won't want to hear that. You're worthy of this though. Amazon, Google, stop investing outside of the top 5 if you want to be rich. I know people are going to tell you to do otherwise. How did it go? Didn't go well.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. It's your boy going up. I know they can't stand it.
I understand, okay, like you're energetic, you are powerful, your voice, you articulate, right? So I understand who I am. Yeah. So now I say, okay, here's my people, here's my audience, here's who I want to connect to, right? What's their data, right? And so now I do a series of posts, polls, whatever, so I can learn the people who I want to educate. And so now what I can do is take their data and say, now I create messages to touch them.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem.
And they don't give me the data I need. So y'all can call me a sellout, whatever you want to. Citadel, please call me back.
Please.
President, hey, wait for the meeting, line them up.
Please.
I'm going.
Please.
Great, take that. Can we do Bad Boy, Hedge Fund Academy? Hey. Look,
Out the Capitol Press.
I ain't said the other one, because I got a bomb I want to drop. Boy, Wojciechowski, boy, I had your job tonight. The shit I know. But go look. Since Ian's so crazy, so here, okay, so y'all say y'all never invest in prisons, right? Yep, if you black. Then if you bought a Bored Ape Yacht Club, you are funding neo-Nazi shit right now. But don't take it from me. Take it from someone that is of a lighter hue and different continent than me. This is just entertainment, sponsored and only thought of by Ian Dunlap and Red Panda and Stock Club. The Red Panda Rebellion has nothing to do with Earn Your Leisure, assets over liabilities, or partners or affiliates. Only me.
Thank you for the disclaimer.
The Red Panda Rebellion.
I like that.
The Red Panda
Come
Rebellion.
on. But hey, they got gold grills on monkeys and got black people about monkeys like, yo, it's artistic. If I did that shit, y'all be like, you and Jay Morrison, the biggest scammers to ever touch the land. I said it, not them. Red Panda, sue me if it's an issue. I got the money to fight it. Shout out to Ally. Earn Your Leisure assets. So I'm on Dame
It said, let's
night.
go in the background. That's hard.
Keep telling y'all know something. Man, most of y'all wouldn't even write. And I'm not talking to all our people. I'm talking to those who say I don't know, and you come and back my motherfucking takes. Dog, some of y'all who saying the same thing I'm saying word for word 2 weeks later. And the truth is there's no competition in finance. So remember, because this is not me being humble, this is performance art. Because when I was quiet with the glasses on, boy, the views loading a bitch. And even in business, please write this down. Sometimes you have to make people hate you to then win them over to then love you. That's what the performance art for pineapple. But you think I'd be that mad about what people say about it? But I've invested in 2000. I don't give a damn what nobody say. My baby, y'all see how good my baby be looking? His skin be glowing. He don't put no tatcha or nothing on his face. That's just him. You see how Shawty and Troy kids be looking? Then you be happy as hell everywhere we go.
Natural fruits and berries, man.
Nothing but juices and berries. This is just entertainment. And if y'all like my performance tonight, please put yes in chat. But
No, that deserves
supporting the Hitler shit.
Ian, that deserves a hell yeah.
But when you get back off, oh man, wait till I talk to Dame and then I get one more FaceTime with Joe. I'm gonna come on and be crazy.
Hell
I'm
yeah.
gonna take the black. Let's go.
There you go.
In other news.
Legendary turned into an impromptu TED Talk.
Yes.
Stood up and everything.
They actually had
Gordon,
they had the curse counter on you, Ian. They had the
Great.
curse counter on you.
How
I think we
much
got
off?
up to 7. So that is a low for you in one of these. So shout out to you for moderating yourself.
It's for, even with, I'm gonna be real, like even with that, if I'm like, okay, well technically the feds are gonna taper back bonds in June, and as a result, the crypto market is gonna fall 13%, and then S&P is gonna dive. Y'all see that all the time on every other channel. Sometimes the truth sounds foreign because you are being lied to so much. Realize that schools, institutions, banks, crypto.com, NFTs, hedge funds, financial influencers, and please stop calling me a financial influencer. I'm a master investor. I'm here to serve the people. If I made you money, please put yes in the chat. This might be me. And then the Lord said on third day. See, I grew up a
I'll wait.
Right?
I'll wait.
Right.
Put yes in chat.
And even with the NFT and crypto space, if I pumped some of these and they fell apart, y'all be hoping that 2 index fall apart. And I told y'all NFTs were gonna fall apart. Man, Ian, crazy as hell. You notice when I say these outlandish statements, this is how you really know. Gary V, Mike Novogratz, Citadel, BlackRock, Bank of America, kudos to you, Brian Moynihan, I appreciate you. State Street, and no big institute, Bono one doesn't say. Because if I was wrong, Josh would call me, or call Shotty, or Bono would call me and say, dog, you off base. You wrong about this one. I know where you was going. When I had a meeting with us, I said it before, and I'm gonna say it quietly. If some of the people that are trying to teach you about investing are so great at investing, why haven't BlackRock, State Street, JP Morgan called any of them? They can tell you, well, it's because I just choose to stay here and I don't want the chance to work with the hedge funds and banks. I'm like, but you working with the feds. You work with the feds, but not with BlackRock.
Let's go to the.
Can I just get these like
this is just
alphabet boys, like shout out to free the guys, free the guys. Real quick, Ian, because like you said, the feds, that's different. I'll be fresh as hell if they watching. But look, tomorrow, Salesforce, CRM will be reporting their earnings.
I love Salesforce.
Yes. And I know we were talking about NFTs. And so GameStop, I know they announced that they're going to be working in the NFT space. They will be reporting on Wednesday, obviously a company we spoke about in detail here on Market Monday.
Can you say the company again?
GameStop. That was GameStop.
Gotcha. Okay.
And then Thursday, one of my favorites, and we spoke about over the past 3 weeks, and me and Rashad actually had a conversation about the cybersecurity space and one of the companies that is leading that sector, or that said CrowdStrike will be reporting on Thursday, and another strong company in the athleisure wear that had a strong run since 2017. Lululemon will be reporting as well. Another very strong company. So those are a few of the companies that are reporting this week. Obviously, it's a short week because the market was closed today. So keep your eyes on those.
Another thing.
I'm happy when I make you laugh. It was 2 moments. Investment came out the side of the stage, and he was like, "Yo, we got a co-following." And when I get a couple of these jokes off, and you start laughing, I'm like, "That boy good." I used to wreck Shotty nerves on the show later.
It's entertainment. It's all entertainment.
It's entertainment.
It's the
Charleston White told me. Charleston White was like, "Yo, the mistake that you made, you came out trying to be a hero. Anytime you're trying to be a hero to the black people, at some point the black people want to kill you. You could have came out being a villain like me."
You spoke to him?
I'm sure they're coming back soon. Let's go.
Oh man.
Yeah, I called the cops.
Shout out 600 Breezy. Shout out 600 Breezy for it. You know.
You damn right I called the cops, man.
The next 3 major stock splits. Amazon, June 6th, 20-1. So that'll make his stock around $113. It's like $2,200 now. Shopify,
10-1, right?
10-1.
Yep.
Not a lot of people talking about the Shopify.
Nah, 10-1 is good.
10-1, and that's gonna be on June 26th. So that'll turn his stock into around $36 a share.
Oh, they need that.
Yeah, and then Google, of course, that's July 18th, 20-1. And that'll turn his stock into around $112 a share.
Yeah.
So the order in which you guys should buy these, Mike, flip this up, please. Google first, then Amazon. Shopify is third. So it's not a superstar. We was having a conversation yesterday if Jason Tatum is a star or a superstar. I would say no disrespect to the god, but Shopify right now is Tyler Hero.
Is
Tyler Hero, who didn't play in the second half yesterday?
Shopify playing well, and it was my baby, one of my picks.
Yeah.
Trust me. Google, Amazon. So anytime that quantitative easing ends, which is just the Federal Reserve putting in money into the market, once that stops, you really get to see. Like same thing, and I posted before, and I'm not doing my Derrick Jackson thing, but when a man money leaves, then as a man, you get to see what women like you for you versus what you could do versus potential. Everybody cute when the money flowing. What happened as of recent, and then June, that's when it's different when the money stopped coming in. Then like June for the Fed, bond market is gonna go in overdraft. So then you got to pull the baby, can he slide the debit card underneath the table so I can pay and feel like a man move, right?
When the money goes, what a honey say?
A honey say. So if the bond market is down, and then I'm telling you, housing market is going to crash, it will recover. And if automotive payments are for used cars are going down, the startup scene is being affected greatly. Let me sit back down. So when I stand up, I'm mad for camera. And when I sit, I'm calm and appreciative. If you've enjoyed this episode,